Welcome back to my channel, Success Blueprint. In this video, we will discuss 1. The SaaS Apocalypse. Why software is crashing while AI booms. 2. The death of the subscription model. What's next for AI and crypto. 3. Beyond the hype. The strategy for a market in chaos. Wall Street is calling it the SaaS Apocalypse. While the headlines focus on AI's unlimited potential, the companies that actually build our software are seeing their valuations melt away. Why? Because the very technology they're selling is making their business models obsolete. Today, we're breaking down why software costs are collapsing, why the adoption era of crypto is officially over, and the one specific investment model you need to survive a market where 20% annual returns are a thing of the past. Let's dive in. For decades, software was a moat. You needed hundreds of millions of dollars and thousands of engineers to build a world-class browser or a CRM. But that moat just evaporated. Consider this. Building a browser like Chrome usually costs Google hundreds of millions in maintenance. But recently, a team used AI to replicate those core functions for just $150,000 in token costs. When the cost of production drops by 99%, the per-seat subscription model, the bread and butter of companies like Salesforce, starts to look like a relic. Why pay a premium for a legacy platform when a startup can use AI to build a custom alternative for a fraction of the price? We are currently in the infrastructure phase. Think of it like the fiber-optic boom of the late 90s. Back then, companies spent billions laying cables under the ocean. Most of those companies went bust, but they left behind the utility that powered the modern internet. Today, the cables are GPUs and data centers. Google alone is projected to spend $200 billion on Capex in 2026. To put that in perspective, that's more than the entire Russian military budget. The warning here is simple. The builders of the tracks, the Nvidias of the world, often face a massive correction once the tracks are finished. The real long-term wealth won't just be in the hardware, it'll be in the app layer. And traditional giants like Exxon or P&G that use this tech to slash their own operating costs. If AI is booming, why is crypto struggling? It's because the market currently views crypto as programmable money. Essentially, it's being traded like a software stock. When SaaS took a hit, crypto followed. But there's a deeper issue, synthetic supply. Between ETFs, derivatives, and massive leverage, we've created a fractional reserve system for Bitcoin. The recent volatility we've seen is that system cracking. The adoption narrative, waiting for a green light from BlackRock or the SEC, is dead. For Bitcoin to hit that $1 million milestone, the narrative has to shift from adoption to replacement. The goal isn't to get permission from traditional finance, it's to build a system that makes traditional finance obsolete. While the West is distracted by tech, Asia is buying the dip in precious metals. This isn't speculation, it's a flight to safety. In China, investors are fleeing a dying real estate market. In Japan, they're hedging against currency instability. And if you're looking at silver, think of it as the altcoin of the metal world. It's high beta gold. When gold moves, silver tends to sprint. Meanwhile, keep an eye on the Federal Reserve. We might be moving away from the chairman as king model toward a Supreme Court-style Fed, where dissenting voices and independent votes create more transparency and more market unpredictability. So, how do you play this? The era of blindly buy the S&P 500 and get 20% is pausing. We're moving into a 4 to 5, 6 world. The move right now? Be cautious with paper hands in crypto ETFs. Look for traditional value companies that are aggressively adopting AI to cut costs. And wait. Wait for the app layer of AI to actually emerge before chasing the next software unicorn. The market isn't broken, it's evolving. And in an evolution, the ones who adapt the fastest are the ones who survive. If you found this breakdown helpful, hit the like button and subscribe for more deep dives into the stories driving the global economy. What do you think? Is the SaaS model truly dead, or is this just a temporary dip? Let me know in the comments. See you in the next one.